welcome Hugh Rogers to the stage. He's been at the forefront of trading and innovation in trading blockchain for 2 decades. He's a global entrepreneur. I've asked him to talk a little bit about himself, and he has some of the best first couple of slides that you're just going to love them as much as I love them. Would you please welcome Hugh Rogers?
Thank you very much, Julie, and thank you for having me, everyone, and sharing this. So can we get that? So just a little bit about me first. So I'm a co-founder of Psi Labs. My other co-founder is Tony Zeman. His background is most recently he spent a decade as the Chief Technology Officer of BFAM in Hong Kong, which is a 5 billion AUM fund. And so he has a lot of experience building the full technology stack for a multi-strategy asset manager. My career has been since about '94 in Zurich, and that's the starting point. And also, I'm returning here now for this, which is kind of interesting. A long career building high-speed trading systems, high-frequency trading systems, ultra-low latency, and for sell-side and buy-side firms. So I've also got a lot of experience in that area. And we both became sort of available to do a startup, and we started talking to each other about our experience and what we thought could be done in the industry. And we rapidly realized that both of us shared an insight, which is that very few organizations in this industry actually integrate everything that's needed to run a fund effectively in a smart way. There's a huge amount of inefficiency, capital inefficiency, even in the tier 1 firms that do this very well. And there's also a huge amount of secrecy and hoarding of infrastructure and effective technology. It's just the nature of the industry. So I wanted to share a little bit about our insights and how we intend to leverage those insights. Has anyone here seen the movie Dumb Money? Very recent movie that's very topical. Okay, so one way of looking at what we want to do is we kind of want to be the antidote to dumb money. We want to bring a lot of these very effective, very inner circle technologies and make them more accessible, and basically give smaller funds and also retail investors access to the leading types of technologies and strategies that they can get access to. So that's a preview. And let me just move through this. I also have a newsletter, thetradingchronicle.com, where I publish articles about the space. And scilabs.io is our site. So like I mentioned, my journey actually started here in Zurich. The last time I spent a long time in Zurich was in 1994. Some things change, some things don't change. Actually, at that time, you couldn't buy groceries after 5 p.m. If you went out of the office, some shop assistant would be gleefully closing the door just as you arrived to try and buy some shampoo. It would be, it was really kind of an old school place at that point. And the only place you could buy anything was in the basement of the Hauptbahnhof. There was this giant robotic vending machine, which must have been a marvel of technology at the time. And you could choose your product and it would sort of bring it to you. We were working with a bunch of young Swiss guys here at Credit Suisse in Uetlihof, which is not very far away from here. After a bit of sort of trying to figure out how things work in Switzerland, we heard the rumor that all the important decisions were made in officers' clubs, army officers' clubs. Everybody in Switzerland does national service. And in fact, everybody in Switzerland not only does national service, they have a fully automatic rifle with ammunition in their house, and yet, despite that, they have the lowest rate of gun crime, one of the lowest in the world. So this I'm not sure if this is still true. Swiss people I speak to about this tell me that it was true and it's no longer true, but some other people say it's maybe still true. Who knows? Another thing that you can't, I looked online to see if there's anything about this, and in fact, there's nothing online about this. So this is kind of maybe it's a secret, I don't know. There was a giant vault full of gold bullion under Uetlihof. Uetlihof is a big hill, and on the top of that big hill is a giant campus, which is Credit Suisse's offices there. In the basement of that, well, very deep down inside that hill, there's a giant vault full of gold bullion. And finally, the reason I came here in '94, in the beginning of this whole journey, was the Swiss stock exchange was changing. It was an open outcry, old school, everybody's like yelling at each other, trading stocks. And it was going electronic, along with, following a trend that was across the industry at the time. And I worked for Oswald Grubel, who later became CEO of both CS and UBS, to build a new high-speed electronic trading system. So that was my kind of entry point into this whole domain of electronic trading. So why now? Well, I wanted to do something different. Most recently, I worked at Paxos, which is, many here are aware, is a crypto firm, a big issuer of stablecoins, and involved in trading. So I ran all of trading and settlement engineering for Paxos. And I left after about 4 years in the end of the summer last year. That was basically driven by a couple of different things, but one of them was crypto's really matured. I mean, I saw it firsthand, the start of it and the first boom that was really serious between 2014 and 2017. In fact, I worked very closely with Changpeng Zhao at one point. He was a business partner of mine. We worked together in Fusion in Tokyo and at Bloomberg as well. And he actually took a few guys out of Fusion who had worked with me to build Binance. So, the chief technology guys there used to work with me. Retail trading has opened up. We're seeing open APIs everywhere. So it's no longer the case, and it used to be the case, that brokers had their own, proprietary closed systems that you had to use to access. Now you can write your own software and you can access a wide range of platforms, brokers, crypto exchanges, whatever, and all those APIs are open. The trader workstation market's really stagnant, so most people who are trading, like retail traders, are using software that's really outdated. In the last major update to the most popular trader workstation, MetaTrader, is 2016. It's a Windows desktop PC application. And individual investors are more sophisticated. So people have gotten burned, right? Like a lot of retail investors, they're still not very enthusiastic about crypto because they got burned. And also they got burned with, meme stocks, with GameStop, and that's the Dumb Money movie, of course. So they expect better. They want to do things in a smarter way. And they want to do automated trading, and they want to do it 24/7. And the tools for that are not great, actually. So this is sort of like a big part of why now. And there is another personal reason, which is that I just spent the last 25 years paying 3 sets of school fees, private school fees, and my youngest is now at university. So mission accomplished. My risk appetite just went back up. So this is a little bit more about the two of us. I'll skip past it because I talked a little bit about my history already, and also Tony's. So one thing about this space, I think everybody kind of has a feel for this space. If you're an investor and you understand this space to a certain extent. But when we're talking about automated trading and electronic automated trading and high-speed trading in particular, and when we're talking about principal trading, not agency trading, so actually investing your own money or the firm's own money or other people's money for gain, there are kind of 3 key drivers that make it a little bit of a strange industry. The one that everybody knows about, has heard about, that I've been deeply involved with is speed. So just to give an example about this, this device is 3.5 nanoseconds. So, that's a nanosecond is a billionth of a second. This is a device made by a firm that I worked with pretty closely at one point to deliver solutions to sell-side firms that needed like really high-speed market access. But speed is key to effective trading when you're doing it in an automated and electronic way. And it doesn't need to be this fast. This is crazy. This is like right at the cutting edge of what you see in the fastest markets. So, CME, CBOE, NASDAQ, that kind of thing. But even in crypto, in the cloud, or in regular FX trading, a little bit of extra speed is actually hugely important. And infrastructure available to retail traders isn't fast. It's slow, and by any kind of reasonable standard. And it's not very hard to actually make it a little bit faster and make it more effective. So part of what we're trying to do with Scilabs, with this project, is actually improve the speed that retail guys have access to, and democratize that a little bit. Another thing that goes on is hoarding, right? Everybody that's at the top of this industry hoards their technology. Even if you buy products, generally speaking, you're integrating them and customizing them in a way which is incredibly bespoke. So, whether it's XTX or Renaissance or Citadel or Virtue or any of these guys, their internal technology stacks are incredibly proprietary and they're carefully hoarded. And there's a lot of secrecy and hoarding that goes on in this industry. And secrecy, right? And Gravity Falls, for those who have kids and used to watch TV back in the day. But yeah, I mean, why are there no patents or very few patents in this space? The reason is the whole industry relies on trade secrets, right? Because if you have something that's working well and it's making money, you're not going to tell anybody about it. You're not going to file a patent. It doesn't work. So there's a huge amount of secrecy in this industry. And when we look at who's hoarding it and who's holding those secrets, okay, so this is like a list of, a lot of those organizations, right? Some of them I mentioned just now. But you've got like some really very well-regarded and effective organizations that are doing this in a very, very effective way. So you've got, guys like Optiver out of Australia, Susquehanna is very well known, Two Sigma, et cetera, right? Myself and Tony have been fortunate to have had access to a lot of these organizations or to have helped them in some way on the technology side over the years. So we have insights into the systems that they adopt and use. And that enables us to be able to conceptualize what could be shared to the third tier down here. And so the important thing to recognize as well is that the tier 2 here, this 1,000 to 10,000 systematic funds that are out there, all these smaller funds, they kind of get access to the tier 1 technology because they're generally like a prime broker customer or have some sort of relationship. But tier 3 is really left out, right? So tier 3 is all the individuals that are out there that are trying to trade, trying to be smart, but are struggling. They're really left out of this whole thing. And in fact, when it comes to dumb money and the real retail investors, they're exploited by tier 1. So their flow is funneled in, and it's called dumb money, and it gets exploited by the tier 1 guys. And that was the whole theme of that movie, which I recommend, by the way. It's a great movie, Dumb Money. So there are two problems. There's a problem for people who want to create automated trading strategies, and there's a problem for people who want to use automated trading strategies. So the interesting problem intellectually is the creation problem. And if you actually examine the process that hedge funds use to come up with trading strategies, automated trading strategies, it looks like this, right? So somebody comes up with some sort of hypothesis based on analysis of market behavior. It then gets documented, typically as an internal quant math paper that's very dense, written by quants and peer-reviewed by other quants. Then it's implemented in code by financially literate software engineers. So software engineers that are not just really good coders, but also understand finance. They can interpret a math paper. There's a lot of sort of R and other tools in here as well. You then have to simulate that thing, backtest it, tune it, calibrate it. You then run it in production in a live trading system with capital allocated, managing the risk. You then look at the P&L and the performance, and you mutate and refine and improve your strategy. And then you go back around this loop. So this loop is the loop that iterates in order to develop and maintain and improve over time, because you continually have to improve. Because something that works like today doesn't work 2 months later because the market changes, it gets used to it, and so on. So this is the loop that actually runs inside all the most effective, high-speed electronic trading guys. And why can't we accelerate that for these creators? Why can't we have a platform that uses AI and ML to automate and accelerate this? You shouldn't have to hire like a ton of quants and a ton of financial literate software engineers and have all this expensive infrastructure in order to do this. This should be something that can be supported by a platform and made more accessible and more easily available. And a lot of it is about integration, but it's also about having a perspective gained from actually knowing everything that's involved here, right? So knowing all the different software infrastructure that's required for each of these parts of this loop, which is something that we have. The other problem is people who want to use automated trading, and for them, they don't have access to it. And what they're actually doing is they're speculating, right? They're speculating on GameStop, they're speculating, they're playing the casino, and sometimes they win, sometimes they lose, and their flow is funneled into, the guys that really know what they're doing and taken advantage of. So what would it look like if you actually wanted to solve those two problems? Well, one part of it over here is a strategy development kit. So something that allows people to really easily express a trading strategy in code and actually get it running. And then the other part of it is a marketplace where you can actually observe different strategies, and you can see a Sharpe ratio and an AUM and an ROI and a maximum drawdown. So these are kind of like the key metrics. And look at that and comparing and allocate small amounts of money, like $100, $1,000 to those strategies and have them run. And if you have those strategies running in a platform and you can allocate to them in a really small way, like, not 100,000 minimum investment, 6-month lockup, quarterly redemptions, typical hedge fund stuff, right? So, in a 3 and 30 or a 2 and 20 or something like that. This is a situation where a retail person can come on, look at a bunch of strategies, see their performance, trust their performance, so it's not something that's being self-reported, it's something that the platform is assuring because it's done in real time. You can see the return on investment, you can see the AUM, etc. And then allocate. They can actually, for the first time, access a style of investing that's really, really limited right now to ultra high net worth institutional investors, right? So this is all about democratizing systematic and automated trading. And those strategies would run in this platform, and then they would access different markets. So the big market that we want to go with first is FX and crypto. So FX and crypto are very popular with retail. They're very large markets for retail investing. And they're also relatively open. It's easy enough to develop against FX broker APIs and crypto exchange APIs. We also want to go to DeFi. Down the road, we want to do stocks and we want to do derivatives, but there's more regulatory impediment to doing those. FX and crypto, basically, we can do without too much regulatory work. And this is what it looks like. So let's say you had $1,000 and you're looking about the last 30 days. You might have a strategy that a guy named Bogdan has written, and he's got Arbitrageur version 3, and it's a multi-asset strategy. It's got a 5-star rating. It's got 1.1 million under management. He's got a 30% ROI. He's got a Sharpe ratio of 2.6, and that looks good. So allocate $100 to that, and that's 10% of the 1,000 that you've just allocated. And then here's what this would look like. So this is a mock-up. So this whole product is a concept. Very early stage. We started, myself and Tony got together in November. We developed this concept. We're in pre-seed stage, so angel investment stage. We're looking for a small amount of money right now to get started with this whole thing. And obviously, as we make more progress, the opportunity is going to change because right now we're giving away quite a bit of the company for a small amount of money. In about 3 or 6 months' time, that will be much less of the company for much more money, right? So we're proceeding regardless, but there is an opportunity right now to help us accelerate, and that's one of the reasons we're here sharing this. So just a little bit about the retail market. I won't go through all of this because in the interest of time, but it's important to recognize that there are about 40 million people out there who are trading roughly 200 billion of assets under management. right, who are retail, who are individuals who are actively trading, like they're on their phones, they're on their PCs, trader workstations, they're actively trading FX and crypto. That's not small. On the institutional side, we actually have a kind of fallback or de-risking, a little bit of portfolio diversification inside our business plan. So the product we really want to bring to market is the retail product because we think it's the most revolutionary and impactful product, and it's a democratization of systematic trading, which we think is really important. The antidote to dumb money. But there's also the fact that a lot of what we're building is really tightly integrated and effective, and we know how to sell it to businesses because I previously sold high-speed trading solutions to Goldman Sachs, Morgan Stanley, Deutsche Bank, others. They've all been my customer. We have an option here to sell our infrastructure or rent our infrastructure to institutional customers. And there's a lot of new funds always coming into the market. So this is actually a fairly sizable opportunity as well. And like I said, we kind of view it as a fallback or diversification because it's going to take time. And that's one of the big problems with the retail product is customer acquisition. So customer acquisition is the big challenge that we face with the retail product. With the institutional product, that problem doesn't exist. It's a very reliable way of making money. There's a significant SAM/TAM there as well. So just to close, this is a consistent theme here. All tech startups are about automating something, sharing it, and scaling it, right? So whether it's Uber, earning from driving, or anyone can be a taxi firm, anyone can be a hotel, anyone can be a merchant and accept a credit card. Well, anyone can earn from developing and investing in automated trading. And this is actually not small. People want to do this. Like, there are lots of people out there that are trading retail currently that really would like to automate that trading, have it run 24/7. And there are lots of other people that would like to invest in that. And so we feel like this is a big opportunity to do something very different than what's currently being offered. That's it from me. So hopefully that was an interesting idea. I hope it resonates with.
Thank you.
Yeah.
Thank you. But the reason why people want to do that is because everybody thinks they have an insight into where the world's going.
Yes.
Right?
Yes.
It's not just that people want to pound at their keyboards and do something. It's that people think they're smarter than the other guy.
Absolutely. And with better information, they can be genuinely smarter as opposed to just sort of being taken advantage of. Yes,
Yeah.
yes.
And insider trading as a result is going to change because what if something that we said in here today, it definitely is going to make us smarter, and as a result, somebody trades better tomorrow. It's not insider trading. It just meant that they went to the right side.
That's right.
Yeah?
Well, one thing I learned in the capital markets industry was that people talk about insider trading, and they're like, no, insider trading, no. But insightful trading.
There you go.
So inside, strike out inside and say insight instead, and then all of a sudden, it's very attractive.
I like that. We'll put a little TM after that.
Yes,
Yeah,
yes, yes,
absolutely.
yes.
Okay.
Yes.
The other thing too, I think you're being a bit humble as usual, Hugh, is that you put your own money in. It's not like you're waiting for somebody to invest in order to get going. You've already put your own money in. People have an opportunity to co-invest with you. I think we need to be clear about this.
That's
okay?
absolutely right. Yes.
Yeah. So, and then also too, everybody's very, very familiar with the whole PayPal mafia and so forth, but the Fusion Systems mafia, of which you were, one of the key guys there, and you kind of glossed over it and so forth, because of maybe a little bit of what's happened to Binance and so forth. But some very, very serious people out there in Asia, you were mentoring them, and there was a whole kind of, supernova effect out of those businesses that you led. I think the most revenue-generating part of Fusion was under your P&L.
Yeah, that's correct. Yes.
Yeah.
Yes. So
I'm the marketing manager for him.
Well,
yes.
So Julie, you know a little bit about Fusion as well. So Fusion was an interesting company. It started about 1992. I joined in '94. Was a partner in Fusion, and actually there's two sort of iterations to Fusion. So the most prominent sort of Fusion alumni that's out there is CZ, He wasn't just at Fusion with me, he was also at Bloomberg with me. But we had a couple of other people that have done different things. Tony, my co-founder now, who ended up being the CTO at BFAM, he was at Fusion, the first Fusion with me. So yeah, Fusion was kind of this place where, when I came here in Zurich in '94, I was not qualified to work on electronic trading in a Swiss bank. That was like totally alien to me.
You weren't in the Swiss Officers Club.
Yeah, so you just turn up in a Swiss bank here on this high stakes project as basically somebody who was just a C++ software developer at the time. Fusion had somehow got those opportunities, which looking back, I'm not sure how we got those opportunities. I think we were prepared to put up with some very unreasonable people and deal with them, and that was.
And
one
you
of
were
the
early.
reasons. And we were early.
And you created a good culture.
Yes.
And not everybody came to Zurich where you couldn't buy shampoo after 5 p.m. Some people said, damn it, I need to be able to buy shampoo at 7 p.m. if I want to, and they didn't come. So, no, you went to the right places, right place, right time. You know, where you play is more important than what you play and how you play. I really believe right place, right time, being early, taking some of the risk, because actually you find ways of de-risking it. And that's what you did in 30 years on. And that supernova effect is so important in the network. You know, when we think about our networks, right? And the ripple effect of all these businesses and how the network plays back to you, right? So now you're basically that, high end to the middle to the hedge funds and the top end, as you say, they're in cahoots with each other.
Yep.
It's really the guys down here or the people in the audience that you're really going to provide a service for, right?
Yes.
And how fast to market? So by FTE Athens or FTE Mykonos, or when are we going to see some fruits of the labor here? How fast are you going to market?
Well, it will be helped if we can get some pre-seed investment money in.
Okay.
And that will help accelerate it. Okay. But on the current trajectory, I would say in the third quarter of this year, we will bring an MVP to market.
Okay.
And that will be most likely, we're hoping for FX and crypto, but it may just be FX initially.
Okay.
And that will include, the SDK, some template strategies.
Yep.
I think the big challenge, as I mentioned, with the retail side of it, and also an area where I think investor money would be helpful, is, and also partnerships, strategic partnerships.
Yep.
If you look at, let's say, Oanda, which is like one of the biggest FX brokers, so a lot of retail FX traders use Oanda globally. Oanda actually recommend MetaTrader, which is not their product, as a way of trading on Oanda. So there's an ecosystem there. You can it's like an app store. You can kind of plug in and have your own app on there. So that's a way in which we can get customers. So that's the sort of like strategic partnership or channel way. But there's also affiliates, like buying customers, essentially onboarding from customers. But there is a big challenge around retail customer acquisition in this space. To me, that's the biggest challenge, and it's also the area where I think investors' money would be most helpful. If it's not for that, then our trajectory is that we'll bring something to market, and we'll also do a lot of institutional business development work in order to keep the company growing and healthy and on the positive trajectory. And that will slow things down a little bit from the retail side of it.
Okay, so by third quarter, so that for us, it's FT Mykonos, end of September. We bring you back on stage at FT Mykonos and you tell us about the...
and most likely by that stage we should be able to do some sort of demo,
Cool. Well, earlier Stefan Roos said that with his Truflation, he says we're in a race to get distribution before the large companies can innovate. Is that fair in terms of here? There's a race for distribution. You said customer adoption, but it's kind of the same thing, no?
Yes.
So is anybody else going to come down and reach that fragmented group? Because if you look at it from an ROCE, it's the group that you make them. It's always the fragmented bottom of the pyramid, but it's painful. But by the time you get it done, you're in a massively powerful position. But it's a question whether the top two parts of the pyramid come down and grab it. But they think they can hold on to the power.
Yeah, I'm not worried about, to a certain extent, the status quo benefits the top tier in this ecosystem.
Okay.
The retail brokers I think in the old days, they did try and vertically integrate. So they would like try and pitch their own software directly to retail, and they would be a competitive threat in this situation.
Okay.
But that's no longer true. They've sort of realized that they can be much more effective by focusing on what they do best, which is broking or whatever it might, or if you're a crypto exchange, running a crypto exchange.
Yeah.
And leaving the client software to the choice of the investor. So the opening up of that ecosystem and the establishment of like open APIs across the ecosystem and the competition that exists between the front ends, to me it's unlikely that one of the big incumbents on the brokerage side or the crypto exchange side would try and compete there. But they do have an advantage, which is they already have a customer base. They have a very large retail customer base.
But there could be other customer bases. There's other highways. You're a car. You just need to go down a highway.
There's
So Grupo Santander, we had a tremendous relationship with them in 2015. Ana Patricia Botín, she said, Julia, bring 100 million customers from Santander to any of the hot fintechs. Why not?
Yep. I mean, I think if you're investing in an automated trading strategy based on some good metrics, like things like the Sharpe ratio, so it's risk-adjusted return, and you've also got good risk management in the platform that's protecting the investor. So things like pre-trade risk filters, things like protection against maximum drawdown, that kind of thing. Then that's a safer product. It's a product that a larger financial institution that's more conservative is going to be more confident like offering to their customers because it's going to have less of a risk profile. So I think this is the challenge that a lot of the guys like Oanda have, is that a lot of times they're pitching CFDs and other products where there's no risk limits on there, and people can lose all their money. In fact, 87% of retail investors lose money. It's shocking.
Wow.
87% of all new traders who trade on FX platforms or crypto platforms lose money, statistically. And the other shocking thing about that is that the 17, whatever the inverse of that is, the rest of them, the small minority that actually make money, they take that flow, they identify that profitable flow, and they pass it off onto other people because they don't want it. Right? So they're actually like deliberately looking for the dumb money that is losing money systematically. And that's what they want to capture, and that's what they want to trade against. Interesting.
Now you're based in Bermuda.
I personally am based in Bermuda. The company is BVI.
Okay.
Yeah, and Sony's based in Canada.
Okay. Yeah. And so let's just talk Turkey here. Somebody wants to put in 100 grand. Is that too small, or is that just right?
It's a little less than the total we're looking for, but it's not too small.
Okay. Yeah. Total that we're looking for is
$500,000 to $1 million.
Got it. Okay. Great. Any questions? Yep, Paul.
What's the $3 million valuation?
$4 million is what we're looking at as a cap. So that essentially 25% of the company is up for grabs at this point. And that's in recognition of the fact that it's super early, and it's really a bet on the team, on me and Tony, and on the concept, and our ability to execute. Now, as time passes and we make more progress with the software development and we get things done, like we have a milestone of an MVP that we want to pass in the just in the later part of this first half, those terms are going to change. So I'm not going to be offering 25% of the company for $1 million in August. That situation will have changed.
Thank you, Hugh. Great job from marketing by Julie there. And just building on the concept that the retail layer is quite fragmented, what's your thinking about the marketing of the platform to hit and penetrate retail, and sort of what's your strategy around that?
Well, I think we do have to get guys like Oanda and other crypto exchanges like KuCoin or OKX or whatever to perhaps even Binance. Binance is a little bit competitive because they have something that they're kind of steering slightly towards this. So I put that as a low probability. But I think the crypto exchanges and the brokers definitely have an incentive to offer more effective trading solutions to their customers, because it'll improve the amount of, it'll increase the amount of trading they do and the amount of assets that they put through. So To me, that's very attractive because it means that we don't have to independently do social media marketing and pay influencers and be online, continually tweeting and posting about our progress. And
The contempt with which
Yeah.
you tweet is intense.
Yeah. I mean, it's not my favorite type of thing to have to do all the time. And even if I sort of outsource it to, but it's there. I mean, it's there. So the direct route is there. I just think it's very tough. And everybody I've talked to in the industry, so we have some prospective investors who are already into FX broking, and they struggle with customer acquisitions. So that means that when they ask me about it, that's marketing and customer acquisition is the thing they focus in on. So I'm kind of reluctant to try and solve that problem myself. I kind of want to find partnerships and strategic partnerships that will do that.
And presumably you've got API that could interface with the big exchanges.
Yes.
Yeah.
Yep.
That'd be great to. I know we spoke before we came into the conference. If we could have another chat.
Yeah. I mean, one of the key challenges is to normalize the APIs. So you take all those crypto exchange APIs and the FX broker APIs, and what you do is you make an internal API that's a normalized version of all of those different APIs, right? And then that's kind of mapping through to what you share with your customers, right? But that normalization is very, very key, because otherwise you're continually reinventing the wheel every time you add a venue.
So you were here in FTE Taormina.
Yes.
July 2019. That's when I first met you. And I remember at that time I said, okay, Julie, get with the program here. You should know this stuff. I knew nothing, and so forth. What do you think about the progress from FTE Taormina, July 2019, to FTE Winter, January 2024? 4.5 years, no pressure.
Yeah, no, I mean, it's been fantastic. And there's so much more, blockchain and crypto and digital assets, related. Even if startups pitching here aren't entirely about that, there's an element of that in what they're doing, because it is becoming so pervasive. And it's very clearly the future when it comes to, if you want to run a ledger, and you want it to be trustworthy and transparent, then why would it not be decentralized and blockchain, right? So absolutely, yeah.
And I actually think that nobody's pitching. I think what we're doing is we're building a knowledge base in a community, and I've always thought that capital follows ideas. And so we put the best entrepreneurs out there, they're sharing their visions, and the money follows them, which wants to follow them. I think it's a market. Any other questions for Hugh? Listen, Hugh, it was really, really good, and it's great to work with you, and I love the presentation. We're going to follow this one. And really encourage. It's great what you're doing. It's great, and the ones that decide to invest in this round are going to have an incredible journey there, because you've made a tremendous amount of value for the businesses that you've led in the past 30 years, and this is your time.
Thank you.
Very good. Thank you.